Welcome to Explain the Charts. Today, June 30th, 2025, we're taking a detailed look at Amazon, AMZN, stock, combining news analysis with a comprehensive chart breakdown. Recent headlines suggest Amazon faces mixed conditions, including tariff uncertainties and increasing capital expenditure on AI. We'll examine these factors in conjunction with the stock's technical performance to form a balanced view. The stock closed at $223.30 on Friday, June 27th. Recent news suggests a potential for high volatility due to ongoing tariff discussions. We need to consider the broader economic outlook and how Amazon's various business segments might perform under different scenarios. Now, let's delve into the charts, starting with the daily time frame. We can observe the overall trend and significant price levels. Looking back to early February 2025, we see a high near $242.52, acting as a major resistance point. The stock has struggled to consistently break above this level, indicating significant selling pressure around that area. Zooming in on the more recent price action of the daily chart, particularly the period from mid-June to the present, a volatile but upward trending pattern is revealed, with some recent large swings up and down. The $210 to $212 range previously acted as a support level. A break below this level would signal further bearish momentum. We can also see a potential support around $216.74, a recent low reached at the end of June. A bounce from this level could indicate a short-term bullish reversal, but its sustainability depends on overcoming the resistance mentioned earlier. Switching to the 1-hour chart, we can analyze short-term trends and intraday price movements. The 1-hour chart shows more granular detail of the recent volatility. We can see the stock testing resistance at about 223 on June 27th before retracing. Let's narrow down this chart to look at candles from June 9th to June 11th, 2025. We can see some support at the 214.15 mark, where it consolidated for a short time period. When assessing the 1-hour chart, remember to consider the broader trend from the daily chart. These two timeframes can be helpful at determining entry and exit points. Looking at the 15-minute chart, we can further refine our understanding of short-term price action. This timeframe is especially useful for identifying potential entry and exit points for intraday trades. Focusing on the end of the 15-minute chart on the 27th, after the large green candle which reached 223, we can see a long consolidation period, but with downward motion. This suggests uncertainty around maintaining those levels and could be a bearish sign short-term. From a news perspective, the possibility of new tariffs poses a significant downside risk. Analyst consensus places the target price above 260, but the economy may not support this long-term growth. So, let's recap key levels. Resistance lies around $242.52, and support around $216.74 and $210 to $212. If tariff concerns ease and AI investments pay off, we could see a bullish move towards $260. However, watch for breakdowns below $210, as that could signal a deeper correction. Pushbacks may also be seen if the July 9th tariff deadline is extended, but do not rely on this. The stock looks ready for either side of consolidation in the short term, but it is generally considered a good long-term investment by analysts. For now, watch those key levels. Thanks for watching, and be sure to subscribe to Explain the Charts for more unbiased market analysis.